this is now the beginning of the end of the drop. Yes, it's going to get uglier. Yes, it's going to get harder for a lot of investors, but I do think below 20,000 gets us very close to that bottom. As much as I am a believer that there's a decent chance of going to 12,000, maybe even lower, right? I don't know for sure. There's also a chance it doesn't get there. So what I have done here is I basically selected and I said to myself, how much money am I willing to invest in Bitcoin in this bear market when it gets down to this area or below? I took that amount, let's just say $1 million, right? And I divide it into 6 categories, 6 even amounts. And when we were at 19,000, I took my first 1/6 and I bought Bitcoin there. And what I'm going to do is every $2,500 to $3,000 down, I'm going to buy another 1/6 position, eventually accumulating a full 6/6 position, right? And so the idea is, I've been around the block enough where I understand that sometimes downside targets don't fully get achieved and sometimes they overshoot. So I don't try to pick the exact bottom. Once we get near, I just start slowly dollar cost averaging in, knowing that my long-term view on Bitcoin is still extremely, extremely bullish. 65K will be a low target for when this thing takes off in the next side. 2021, then 250, then 500, and it was ridiculous in that side. And now you're starting to hear the opposite. Everyone's saying, oh, it's a scam, it's going to go to zero. Those are actually contrarian views that as an investor you need to separate from your own emotion. Meaning the more I hear that, the more I believe that we are getting closer to a bottom. And basically it just comes back to common sense. Just use your logic, right? Logic is the most powerful thing in investing, but so many people get caught up in emotion instead to make their decisions. But if you think about how eventually we're going to slide back into a big recession, the Fed eventually is going to have to print more money. Central banks have already printed tons of money. There's a general need from a people's perspective all over the globe for this alternate to fiat currencies that cannot be printed willy-nilly. I mean, all of these factors make us need some sort of digital currency. Now you can say, well, gold could fill that role. I agree it does, but try, sending gold over countries, right? I mean, you can't pick up a bag of gold and just walk to the airplane and carry it easily. The key to crypto is how easily it can be transferred from country to country, how quickly, and how, again, it doesn't have that endless printing ability like fiat currency. So I'm in the camp that this is now the beginning of the end of the drop. Yes, it's going to get uglier. Yes, it's going to get harder for a lot of investors, but I do think below 20,000 gets us very close to that bottom, maybe around 12, maybe sub 12. But in the scheme of things, when you're talking about a move from 65,000 down, we're kind of at the tail end, right? We've already come down 40, 45, 50,000. It usually takes about 12 months for Bitcoin to bottom out. So that means that puts us kind of later this year, November-ish, for when a bottom could be in. And then there's usually a 6-month period of just ups and downs, kind of making people, bulls think they're going to win, then they get smoked, and then bears think it's going to go lower, and then they're wrong as well. So that choppy 6-month period. So what I would say is by late 2023, so you still, unfortunately, you still have at least another year of this, probably mid to late 2023. I think that's when the next move up can take place. And I also coincide that with my macro view that by that period, inflation will have come down to 4 or 5%, but the economy will be really suffering. And it's likely the Fed will then turn on the spigots again and start stimulating to try to get unemployment, which at that point has probably spiked to 7 to 10%. They'll start to get that down by printing money and stimulating. Bitcoin is a 13-year-old, right? So it started in 2009. Here we are in 2022. It's the equivalent of a 13-year-old. I mean, for those of us that have kids, my kids are younger, but I've certainly known many 13-year-olds. I was one at one point, believe it or not. We weren't exactly rational. We were very emotional. We had these wild emotional swings up and down. And that's what Bitcoin's doing right now. It's kind of a very young asset. People are still trying to trust it, which makes it very volatile, versus gold, which has been around for thousands of years, and a big day on gold is like 2%, right? I mean, like, holy cow, gold moved 2% versus Bitcoin like 20%. And so you have to kind of put it in perspective and say, okay, we all want it to mature into this offsetting of inflation and everything like that, but you got to give it time. In general, in a bear market, we want to stay away from the smaller, more speculative coins. I learned this the hard way in the stock market with small caps, where in bear markets it's harder to raise capital for coins that are still in that kind of establishing themselves phase. That's going to be very hard for them to attract capital in this type of environment. So you have to be careful with those. In general, I like to stick with kind of the top 20 coins because those are the biggest market caps. Those are the safest. Granted, Terra Luna taught us that wasn't necessarily all safe though, so you still have to be diversified. I will tell you this, is that as I accumulate my longer term hold position, like I picked up a little Bitcoin, I am looking to do that to Ethereum as well if it gets down to, let's say, 825, 800. So the key is that for me in my HODL position, which I'm kind of calling it that, where it's a longer term holding position, I'm really just focusing on Ethereum and Bitcoin, right? So my portfolio is a separate portfolio that I'm putting aside. It's more like a diversification insurance policy, and I'm really sticking with these two, mostly Bitcoin with kind of a smaller percentage in Ethereum. And the reason I'm doing that is because I don't know how the other coins are going to do. How's Solana going to do? How's Ripple going to do? How are these other ones? I honestly don't know, and that makes me unsure about putting kind of my long-term money at risk at this point. So you can see here on Ethereum, we've had an amazing collapse. We basically kissed this 850, 825 level. That was my level to kind of start buying my longer term position, very small at first. We never quite got there, so I just didn't get filled. But now we've rallied into minor resistance. And again, ultimately, I probably think that Ethereum still has more downside to go, even if it does continue up here in the short term. So for me at least, focus on best of breed. If you're someone like me that doesn't like losing money, then you need to go with the safest blue chip. So here's Cardano, right? And I'm going to get rid of some of these other lines because these are just other lines I don't want to confuse people with. But basically, Cardano is borderline maybe breaking out. And what you can see here, as I erase this last one, is you have this beautiful wedge pattern. And look at how Cardano is hitting on this line right here. If Cardano can get through this line, which is around 50 cents, 51 cents, you actually get a near-term breakout. And I think your short-term upside, your near-term upside would be back to about 65, 66 cents. So that's something I'm actually watching on the Cardano chart. Now, on the same respect, if it breaks this line here, you have a move down to about the 39 cent level here. So right now, I like the fact that it's hammering on this level. We just need one little push to get it through, and I think you get another substantial pop all the way back to this high here. Now, granted, if you look at the bigger chart, it's still way, way down there, but as a technical trader, we have to go by short-term levels, right? So if it gets to that next level, we can say, okay, well, if it breaks this now, where's your next target? And we can go from there. But right now, we're focusing on this wedge pattern. Can it break to the up? Yeah, so really, you know, a lot of people will jump in before the breakout, and then they'll be like, oh, crap, it went down, right? And it broke down. So really, if you're going to play this, you want to see this get above this level here. Okay. Jumping the gun, it can sometimes work for you, and then other times it just goes down and will break down, and then all you have to do is look at yourself to blame in that scenario for kind of trying to get the edge, and the edge just didn't work out. Yeah, so I'm in that same camp is you know, just like with oil, Russia is able to sell to China, to India. They have to discount it, but ultimately they still get that oil on the open market. And the same thing with gold. So, I mean, if there's certain countries that are saying, hey, we're not going to buy your gold, there's always going to be some country that says, well, if you discount it 15% or 10%, we'll buy it all, right? So I don't really think that'll impact it greatly. And I ultimately think that gold, I mean, you just mentioned about my call for 2022 that it would be the best performing asset. So far, it's blasting everything out of the water in regards to the stock market. S&P down well over 20% and NASDAQ down 30% or so. But it's important to also recognize, and this is a big thing that people miss, is that number one, when the dollar goes up, usually gold falls. The dollar has ripped in 2022, and gold has basically been net positive for the year. The same thing with yields. When yields historically have gone up, we've seen gold get smoked and fall sharply. And just let me show you the DXY here real quick to just put this in perspective, right? Yeah. So if we look at the DXY, this is where the dollar was at the start of the year, all the way down here. It has had a massive move up. Yeah. Yep. And so that, to me, right there is awesome for gold. Like, the fact that gold is holding its own in that environment is incredible. And then if we look at the 10-year, look at the 10-year. I mean, here at the beginning of the year, we were down here at like 1.5%. We just topped out at 3.5%, still above 3%. That's a 100% move on yields, and gold is still holding its own. So these are signals that tell me, I mean, they are just screaming to me that gold is being accumulated by big money, and that gold is going to have a big run at some point in the next 12 years, right? I mean, so we've seen, I mean, think about this, right? The dollar has pulled back a little bit over the last 3 weeks or 2 weeks, and we've seen yields pull back a little bit, and gold hasn't really gone up. So maybe that's the internals of the market reacting to the discount that maybe Russia has to do to sell their gold, and it's kind of keeping the tabs, kind of the top on gold right now. Hard to know for, so again, there's still lots of trading opportunities, but this is a trader's market, not kind of a close your eyes, throw a dart at the board and just make money market like we had in 2021. So just be aware of that if you're an investor.